Hey everybody, this is a quick overview of Chapter 8 and the topic of internal control. Looks at Rosenquist Company, and which has internal control procedures over cash receipts. So we are thinking specifically about cash. What we're being asked to do with this problem is identify the internal control principle that is applicable to each procedure. So letters A through E describe a certain procedure that is in place for this company as it relates to cash. Let's go over now the different options in those drop-down boxes. These are internal control procedures: establishment of responsibility, segregation of duties, documentation procedures, physical controls, independent internal verification, and human resource controls. Okay, this is a little bit of a mouthful, but if we think through the language and then apply some examples, we can start to break it down. So establishment of responsibility is, as the name suggests, we want to make sure that a cashier is the person who works at the cash register. We don't want someone who is supposed to be on the sales floor cycling into the cash register and then back out again. We want someone who is trained as a cashier and who understands the rules to be at the register. And then we want to make sure that that person is part of a system of when their shift ends, the manager counts the cash and has a clear documentation. And this gets into some of the other controls, but a clear documentation of the cash that was in the register when that person's shift started and in the register when that person's shift ended. Okay, so establishment of responsibility. Segregation of duties. As an example here on the screen, we want to make sure that the accounting employee who maintains the cash balances, maybe does the entries for cash in the accounting records, is not also the person who's going to be handling the cash. Because if you have one person who can both handle the cash and do the accounting records, that person can maybe pocket the cash and then put a journal entry that shows the cash is lower than it really in actuality is. What segregation of duties will do is it will ensure that that one person has control over the custody of the cash, and that's the example here on the bottom. The second person has control over the recording of cash. What this does is it doesn't allow one person to have control over both of those activities. If you give one person the ability to both handle the cash and also record the cash, that person has the opportunity to manipulate the amount of cash on hand, because they can, and I'm going to use a cynical example here, they can pocket some of the cash and then maybe put a journal entry, change one of the journal entries to show that cash is actually lower than it should be. By segregating the duties, it makes that type of sort of misappropriation or theft of cash harder, because you need both people to be kind of in on it. So segregating is one control that we can have, segregation of duties. Okay, documentation procedure. At a cash register, the receipt is a documentation procedure. We are documenting that a certain number of products were purchased by that customer, payment was made, maybe some change was given, depending on whether credit card or cash was used, and the store has documentation of the products, the date, the time, and the type of payment. Okay? Physical controls. Again, let the words guide you. At the back of every store that deals with merchandise, there's a safe. Okay? And the idea is that the money, you've got registers in a store. At periodic points in the day, the cash is taken from the register and put into the safe. That's a physical control. The idea of a receipt, maybe at the end of a transaction, a customer gets a copy of the receipt, the store retains a paper copy of the receipt, and then, of course, a copy of that transaction also is in the accounting records. The store's copy of the receipt is put into the register. That way there is a paper verification, a paper documentation of that transaction that can basically tie to the accounting records. That is a physical control when we take physical control of that receipt and include it in the register. Got some other examples here. Alarms in the store. You can think about the cameras that are in the ceiling of stores, looking down on the store as customers are walking around. These are all examples of physical controls. Okay, so independent internal verification. When we have segregated duties, we can each person can independently verify that the cash received is equal to the cash that is recorded, is equal to the cash that eventually gets deposited into the bank account. That whole process results in independent verification of the cash that has moved into the company from the customer's hands into the company's safe, into the bank account, and recorded along the way into the company's accounting records. Okay, finally, human resource controls. The example of the cash register would be having a cashier who's bonded, meaning that person has been independently verified as being trustworthy with cash. So that's a way of just, it's kind of like a background, it's like a background check on the employee as it relates to their handling of cash. Okay, so what I'd like for you to do is take a shot at answering these remaining four examples. And what we can do is we can discuss this on Monday, which will be our final class. We can discuss it on Monday and look at, kind of talk through any examples and any questions that you might have. Remember, these are procedures that, for some of you, especially those of you working in cash, you will be familiar with them simply because you've worked with them. And what we're doing is we're assigning language to the actual procedure, the internal control procedure that maybe you've already taken part of. Okay? We can talk more on Monday, and that's it for this chapter 8.